Hello everyone. Before we jump into the presentation, let's suppose two scenarios. The first scenario would be a slightly changes in the interest rate system by the US government can cause on the daily expenses of the livelihoods of a day laborer or a garments workers in Bangladesh. A slightly changes in the prices of the crude oil in the Middle East can can increase the expenses of the daily livelihoods of an university student of Rajshahi. So how this works? What is the mechanism? What is the evaluation period of these systems? In today's presentation, we are going to discuss about the exchange rate system of Bangladesh, its evaluation, its mechanism, its challenges, and its policy implications. I'm Tanzim Hassan, and the last three digits of my student ID number is 105. So we are going to discuss about those, and this is the presentation agenda, starting from the introduction, and then we are going to discuss about the evaluation period, and then the mechanism, and some influencing factors, which means the trade, the remittances, the inflations, etc., and then the comparative analysis, along with the policy recommendation from us. And this shows why the exchange rate matters. So basically, the exchange rate is a critical macroeconomic variables which affect the trade, inflation, investment, and external debts. Also, it shows that the export earnings from around the world, which is dependent upon the RMG sector, which allocated about 80% plus, which shows that we are the top 10% in the world on the remittance receiving country globally. and and the presentation traces the evaluation, the current mechanism, the key drivers, and the path forward. And this is the historical evaluation of our exchange rate system, starting from the 1971, about fixed pay, which shows that we have about 7.30 taka between $1 in 1971. And then the dual rate happened, which means the official rate and the secondary market introduced in 1980s. And the 1992 effect, which shows that the foreign exchange interbank market establishment. And then the BOP crisis in 2020 to 2022 to 23rd, which shows the post-pandemic era of COVID-19, and the balance of payment crashes between 25 to 30%, and the reserve fall sharply. And this is the current exchange rate mechanism of Bangladesh bank system. So how the Bangladesh Taka or Bangladesh rate system is determined today. So the interbank market, firstly we are going to discuss the authorized dealer of banks trade the foreign exchange system in Bangladesh, which the daily reference rate published on Bangladesh Bank official website. Also, the ABB and BAFEDA coordinate the orderly markets. Also, the roles of Bangladesh here is to sets and publishes the mid rates, which intervenes the spot market, which means the buy and sell market. And 2024, the crawling peg, which shows the mid rate of BDT 117 US dollar initially, and the bank gradually buys and sell and coordinate the markets. And there are the factors which influence the exchange markets, which mean the key drivers, starting from the trade balances, which shows the persistent current account deficit widens the foreign exchange demand, which RMG export performance is critical. And then the inflation differential, which shows that higher domestic inflation versus trading partner leads to long run the taka depreciation. And then the global commodity prices, the remittance inflows, and the FDI capital inflows. The FDI capital inflows shows the FDI inflows boost the foreign exchange supply, the profit repatriation, and the loan repayment reduces it. And lastly, the USD is strengthened of the Federal Reserve policies. And here are the recent challenges in the exchange rate volatility between the 2022 to 2023, the exchange rate crisis caused by the post-COVID commodity price surge, also the Russia-Ukraine war, and the energy and food cost, and along with the global financial tightening, which means the strengthening of the USD or the US dollars. And also and the impact of those causes of the exchange rate crisis, and the Bangladesh Taka depreciated between 25 to 30% uh, versus the US dollars. Also, the foreign exchange reserve fall to US dollar 46 billion to 20 billion dollar, which causes the multiple exchange rate system created distortions. And as a response to this exchange rate crisis, the IMF loan packages of USD 4.7 billion occurred in 2023. Also, in May 2024, the crawling peg introduced in Bangladesh exchange rate system, which also shows the exchange rate unification efforts, which shows the remittance incentive restructuring. This is the comparative analysis of Bangladesh economies versus the closely related socio-economic pathways of other countries like India, like Pakistan, and the Vietnam. Starting from the Bangladesh economy, which shows that we have the managed float or the crawling peg regimes, and we have about 20 billion of a foreign reserves, and our strength of Bangladesh economy is the growing energy sectors and the remittances. As per the India, their foreign reserve is actually 600 billions with deep forex markets and diversified economies. And the Pakistan, which have 9 billion approximate US dollar reserve supports, and their strength of economy is IMF supported reform pathways. And talking about the Vietnam, they have the managed band regime, which shows the 90 billion of foreign reserve, and their strength then will be the diversified export and strong FDI. And this is our policy roadmap for the exchange rate stability. This shows to rebuild the foreign exchange reserves, to target at about 4 to 5 months of import covered through export promotion and FDI attraction. Secondly, the develop forex market depth, modernize monetary policy, unify exchange rate, diversify export, and lastly, the formalize remittances via tech. And this is the conclusion, which shows how we discuss about the whole presentation. It shows that Bangladesh exchange rate system has evolved from a fixed peg to managed float, and now the crawling peg. And the IMF supported crawling peg is a pragmatic step toward the market realism. And Bangladesh Vision 2041 aspiration demand a credible market routine exchange rate system that support the competitiveness and investor confidence. And thank you everyone, uh, thank you those who wait till the last of the presentation. Thank you everyone. If you have any question and queries, let me know. Welcome and thank you everyone.